Hi everyone and welcome back to Grumpy Monkey Trading. My name is Michael. On the show today we have another BananaRama round where we take a look at Cramer's Mad Money Lightning Round stocks. We add in some analyst feedback, we add in some technical charting, we add in some of your Twitter comments, and we try and pull that all together as an educational resource for you guys to take a look at those stocks. I hope you had an opportunity to check out my other show, We the People, debuted on Tuesday. Link probably over here or maybe over here, where I do a more in-depth look at individual stocks, taking weekly, daily, and even hourly charts and making a story from them based on ones that were recommended by you by either messaging me or commenting. So please do those things, tappity-tap those things out so that I can take a look at them. And yeah, that's about it. I hope you had a good week. Now it's time for the show. Sun Edison, SUNE. Kramer says, Sun Edison is a front-see, back-see story. I've been reading Carlton English at thestreet.com, and I really is what I consider to be, yes, I'm going to say it, a dead cat bounce. And yes, they do bounce. So Kramer is saying in the short term, we might have a bit of a bump up, but overall, this cat is dead. We don't need to open Schrodinger's box to find out. From an analyst perspective, though, they take a little rosier approach. They have 3 holds and 15 buys, with the most recent ones in this month indicating more of a downwards projection around 7.5, but some still maintain their 20 projection. So they have positive feelings. We also have a couple of tweets to take a look at. We have the Nickin saying ready to load up again in the 2s, so he thinks it's going down, while I'm not even going to try and pronounce that one, but he says it's either going up 15 or 30 tomorrow, getting ready for the big climb. So he doesn't really care. He's lining his pockets with money. Let us check out the chart. What we have is a really sad sack story for the last half year, where we've plummeted from 32 down. We entered this downward channel here, but we broke out of it. Great, we broke out of the channel, we hit this upper resistance line, and now we've settled back. We're going to potentially challenge this support line. If we do, then that first fellow's prediction of 2 is probably going to be the most likely. However, what we do have is a cup and handle pattern forming. So we have a fairly nice cup, and we have a handle that's within about the time frame for a handle. These patterns are generally continuation patterns, so it would be, you would see the cup on an uptrend and the reverse cup on a downtrend, but sometimes on the downtrend you can actually have a cup that goes the proper direction. If it is a cup and handle, then it'll challenge this upper resistance line that's heading towards the 4s, about at a 4.5. But it really would need to break this upper resistance line that it had trouble with last time to really be considered a true breakout with volume. So in the short term, you could see a bounce up to at least challenging this resistance line, but the market is down already today in Asia, so it could very well, challenge this lower one, in which case we're headed down. So not great. The only thing that you can really hang your hat on is there's healthy volume, and we did get a bit of a bump up last week. So hopefully... Kinder Morgan, KMI, Kramer says, keep wondering. The rest of us are wondering ourselves, so we're not going to touch that one. Analysts, though, have a much more cautious approach with only 6 holds and still some buy ratings with 8, but they are lowering their projections, so lowering down to 20 or in the low 20s. From our stock twits, we have a couple. We have share an idea, KMI will be shorting it tomorrow anywhere in the high 14s. We'll cover it the 13s, so bearish. But Jenny says, here's my KMI trade. I'm loving the price action. She thinks it's going to break out of that trend line and head towards the target. So let's see what we see in our chart. All right, so here we have another slaughter of a stock. We've just been taking a pounding here, plunging here in late December into a bearish wedge pattern. So we've been just falling. There's no reason to believe that we're going to exit out of this right away. We would need to push above that upper resistance line that Jenny had marked, and that was her target at 17, which was the previous high. That does seem reasonable. I think the more likely scenario, though, is in the short term, the bearish outlook. One reason for that is that the stochastics don't look like they're going to be reversing anytime soon. The market is already down, and I think there needs to be some recovery time where we waffle in that margin for a little while before taking off with any sort of volume. But this would be the upper target if it were to break through that resistance line. Twitter TWTR. Kramer says, I think Twitter is going down. My charitable trust owns a small stake in it. Why bother owning it? Well, because I think that the franchise can be re-energized, but I have very little near-term hope because the company has given me very little near-term hope. And analysts are also kind of on the fence with 3 sells, 24 holds, 18 buys. Most recently, projections have been dropping to under 22. If we look at our friendly stock twits, we have Okioki's 03s, which I just thought was funny. The only hope to recover your losses is to win the Powerball, which I hope you have your tickets over $1 billion now, which is crazy. We got a couple, so wish us luck. Junior 22, the real question is how they will monetize non-logged in users. I think that is a good question because they're certainly doing a lot of different programs, but it's unclear how they can actually monetize things like moments and whatnot without a lot of traction. And then China's second child, you're going to get killed if you hold before earnings or through earnings. You might be dreaming if this pops to mid-20s, mid-teens coming soon. Certainly the earnings could be a bloodbath, but there may be some positives in there because certainly in my use of Twitter, I've noticed a lot more ads, a lot more promoted tweets. So I don't know if that is translating into real revenue or not, but I've certainly noticed a change in the last few months. If we look at this chart, we see that downtrend, long and pronounced with an expanding downward pattern. Those eventually do tend to come back and be positive. But we have sort of a combination of that expanding pattern with a downwards wedge pattern. Both of them do tend to break positive eventually. It's just a trigger is when is eventually. If it's after earnings and earnings are positive, then you could bust up to at least 25. But certainly in the short term, it needs to maintain this lower support line or else we are going to see those teens that were talked about previously. So certainly it hasn't been looking good. I'm not super stoked about the stock. If you follow Elliott Wave, you can argue that that's a 1, 2, 3. So it means that we still have both a 4 to get probably to here and a 5 to go further down in store for us before there's a recovery. So if you're looking to buy, I would certainly wait a little longer. And yeah, earnings are going to be risky. I think in the short term, though, it's going to go up to 21 or so. Halliburton, Hal. Kramer says, there we've got a government regulation issue. We also have oil going down. The numbers are probably too high. I'm going to say stay away from Halliburton. Analysts, though, have a little more bullish perspective with 9 holds, 18 buys, only 1 sell, and most recently they've even raised the buy up to around the 40 region. On our stock twits, we have the deal is blocked, internal stops working on merger. That's some of the regulation issues. The merger is still up in the air. Greason holding up better than I had anticipated in this downturn. I guess that is a small, teeny vote of confidence for the stock. And George for IT, buying this or any other depressed oil stock is like betting that some geopolitical event will happen to cause a spike in oil prices. So maybe something in the Middle East happens and that raises the fear tension, which has already happened a little bit as well to raise the price of oil. Let's take a look at the chart. We have this nice classic head and shoulders pattern. We have shoulder, head, shoulder, and the following downtrend. We're in now a bearish wedge pattern, which tends to break up eventually. We are nuzzling close to the bottom. Expectations are probably that this current week we will edge further as oil continues to fall on fears of China. Presumably, though, we will challenge one of these upper boundaries, so 35, 36 region at some point, but we would really need to break through one of them to actually get any sort of upwards momentum. So at this point, you're just playing in the sandbox of the channel. AIG. Kramer says, I happen to like the guys who are running AIG now. I like Peter Hancock, the CEO, and I think he's doing a very good job. And the stock is now under its tangible book level. They'll be in there buying it. Is there a hurry to do it? I think you would buy it down in stages because it's not a bad company at all. Well, analysts have a 2, 7, and 10 with an outperform looking at a 72. If we go to the stock charts, as I didn't get the stock twits for this one, 72 is way above this upper resistance line, so that's a positive looking at the daily here. On the negative side, though, we have plunged below this lower resistance level of the symmetrical triangle, which is not a good thing to do. If I was to look for a bit of a saving grace, it's that the stochastics indicate that a reversal is in short-term order. So I think we're going to come back and challenge this, what was support and is now resistance. I think we're going to come back and challenge this probably tomorrow. And particularly, it's the hook pattern. That's something to look out for in particular. In my opinion, it probably shouldn't have ended that way on Friday and was pushed down a little farther than it should have been. If we look at the weekly, we can get this expanding upwards trend, which is really nice. We're in a nice bullish pattern. We have a 2% dividend, which is not too shabby, but certainly concerning that we plowed through that support level because our next support level doesn't really happen at a major level until slightly below 56. So if we don't have that recovery in the short term, then I would look to 56. And if you're a believer in the stock, that would be a good place to get into it on. So that's all we have for AIG. Tesla, TSLA, Kramer says, I have no desire to buy Tesla in this market. This is a very, very tough market. There is speculation that some people want to be in, but I am not one of those people. Analysts, there's a bit spread across the board with 5, 9, and 11. But most recently, some of the targets have been in the 385, 400 region. On our stock twits, we have the red dragon saying it's broken down too much, broken the uptrend, bearish down to 205, 200, expecting the bounce then. And then NALC 542 need a strong gap down through support. Algos trading on technicals, also bearish. And then the stock king put up a nice symmetrical pattern here saying that he was also bearish because it had broken downwards through that pattern. Taking that one and extending it a bit farther into the weekly, we can see that that is actually a fairly major support level that it has broken. He was doing it based off of the lower one here as well. But if we go back a little bit, we can retrace to these major peaks in the weekly going back a couple of years, and we see that it's punched through with a good level of volume. So that is definitely a bearish signal heading towards some of those targets that they mentioned before in the 200 region. Certainly with some of the question marks about China and just oil being so low in general, is there's just not that oomph for a Tesla right now. So certainly bearish in the short term, at least down to this lower support line. So that is Tesla. All right, everyone, that is our show for today. I hope you enjoyed it. I hope you can like, share, comment, message me with interesting things about the show. I hope you have a great week. I hope the week isn't horrible on the market, although certainly I think it's going to start a little poorly. And I wish you all the best. See you again next week.